Hello, everyone, and welcome to today's webinar. I'm your host, Nick Zulovich, part of the team at Cherokee Media Group and senior editor of Subprime Auto Finance News and AutoFin Journal. Thank you so much for joining us for this session titled Ensuring an Audit-Worthy Repossession Process, What Financial Institutions Need to Know. It's all brought to you by our friends at Allied Solutions. But before we get started, just a couple of quick items to mention. We are recording today's session, so keep watch of your inbox for a message containing a link so you can review the great webinar information and share it with your teammates. You will be in listen-only mode for our webinar today, but you can ask questions using the chat function here on the Zoom platform, and we'll get to those questions after the presentation. So enough from me, let's get straight to our featured presenters from Allied Solutions, Tina Love, Susie Straffen, and Scott Myers. It's all yours.
Thank you, Nick. And thank you for your continued partnership, you and Cherokee Media. We really appreciate this relationship, and thank you for hosting this today. We are so excited to be here. My name is Susie Straffen. I'm the Director of Finance Company Markets for Allied Solutions, and as such, I manage the activity within the auto finance space here at Allied. I'm joined today by two very impressive colleagues of mine, proud to be associated with them. First is Tina Loves, who is the Senior Vice President of our Claims and Recovery Solutions, and also Scott Myers, who's the Director of our Repo Plus program, which is our process for the recovery of damages related to vehicle repossession. And I guarantee there are not you will not find any experts that surpass their knowledge. They are just incredible, absolutely incredible, talented people, and we're so happy to have them here with us today. So just a brief rundown of the agenda. We are going to just touch on industry trends and some of the activity that's come down from the CFPB lately as it relates to what we're talking about here today, the repossession process. And then we'll dive right in with Tina and Scott to talk us through how to mitigate the risk associated with repossession and recovery, talk through some takeaways, and then go to some Q&A. So with that, we'll go ahead and get started. So I doubt that anyone on this call will be surprised by any of this information. I think we're all very involved in reviewing and monitoring and, kind of seeing what's next as far as the economic and regulatory landscape. So, we're in a tight spot right now economically and from a regulation standpoint. And some of these statistics reflect that. But basically what we're looking at is record high auto debt, record high vehicle sales prices, record high monthly payments, record high loan terms, and all of this among a very precarious economic situation with rising inflation, gas prices, interest rates. It all sort of creates this environment for increased delinquencies and repossessions. We are not in the environment we were during the pandemic with payment relief and assistance programs seemingly around every corner. Things have changed pretty dramatically. And so we're looking at, the increase of delinquencies, although we're not into pre-pandemic levels yet, the trends are going that way. And so we felt it was important from our standpoint to kind of run through this and educate folks a little bit on what it takes to put together a solid, compliant repossession process, given everything that's going on. In addition, compounding the economic strain that we're all experiencing right now, we have increased regulation and scrutiny from the CFPB. Many of you may be familiar with the February bulletin that was issued, 2022-04, mitigating harm from repossession of automobiles. And basically they're saying, the CFPB is saying, hey, we're concerned that these market conditions, high vehicle prices, et cetera, may create the environment for risky auto repo practices, since repossessions can command higher prices when resold. And there are a couple of other items in there that they're looking at as well. So this is their way of letting it be known that they're going to be looking at this process. And so, you know, we're awaiting this influx, and you know, what do we do when it all comes kind of crashing down? So we're really, you know, we're hearing it from all angles here. So that's something to look at. Some of the other observations within the bulletin include the following: illegal seizure of cars, sloppy record keeping, unreliable balance inquiries, and then the ransom for personal property. So there is a list of basically what to do and what not to do within this bulletin that some of the legal experts in this field have recommended lenders take a look at, as it's a pretty straightforward list of what they're looking for and what they're going to be scrutinizing. So lots of pressure economically and from a regulatory standpoint around repossessions in that process. So here are some suggestions, and we're gonna let Tina and Scott take us through more of this, but basically some compliance suggestions around, you know, what lenders need to be doing. Obviously, reviewing the procedures and policies regarding the cancellation of orders, monitoring the service vendors for compliance, any third-party agencies or vendors that you're using in that process, reviewing processes and procedures around payment allocation, and monitoring for unlawful fees charged for repossession. So lots to look at there, and certainly it sets up the environment for, as we discussed, for increased delinquencies, and just you know, what is that landscape going to look like, and are we going to be ready for it? So with that, I am going to turn this over to Tina and Scott for how to mitigate recovery and repossession risk.
Thanks, Susie, and good afternoon, everyone. Scott and I are just going to drill down on a couple of best practices here, really to help you lessen your risks associated with repossession and recovery activities. So we're going to talk first about documentation. I can't stress, other than saying document. Documentation is more important now than ever before. The CFPB is laser focused on record keeping and your file documentation. Remember, I mean, we have a colloquialism in the claims world where if it's not in the file, then it didn't happen. So document more and not less. There's 4 points here. The first one is proof of vehicles sold for a fair market price. Sales proceeds documents have to be kept in the file, stored in the original customer file in some way, either electronically or paper or however you store those. So an example of that would be that auction sales receipt that shows the sale price, it shows the deductions, and then it shows the net proceeds received and applied. You need to be able to prove that your vehicle sold for a fair market price. The second item here is also identifying any damages to that repossessed collateral. This is key to filing insurance claims post repossession and recovering those dollars. Condition reports, damage estimates, whatever you have should be maintained in that customer record so that you can submit that information to any insurance carrier where coverage exists for the lien holder. And having thorough records here will protect your right of recovery, especially if you're filing those claims and negotiating those settlements with those primary insurance carriers on your own without the benefit of a partner. The third here is complaints. A complaint log is just vital. Definitely a written process for how you handle complaints should you incur an audit. Each repo complaint should be thoroughly documented, responded to according to your internal written procedures, and just ensure that you actually have an internal complaint process. You want to capture complaint date, detail of the complaint that's been alleged, a complete record of all the communication back and forth about that complaint. And then you want to capture the resolution. What happened? How did you resolve it? And then the date the file was closed. I can't encourage you enough to be as thorough as you can be in your complaint documentation practices. And then the fourth one here, there's as much scrutiny around ancillary product refunds as there is around repossession activity. So be sure to create and maintain a thorough documented process for how ancillary product refunds are handled. In addition to the actual cancellation record being documented in that customer's file. So make sure you, well, first of all, make sure you cancel the ancillary products. You get those canceled, you get them canceled timely, you show that in your customer file, and then you show that those refunds were applied to that customer's deficiency balance. Next, the second tip here we have is prioritize your repo agents. And then the first item on this list is assign it as early as possible, folks. The early bird catches the worm. The earlier you assign that repossession, it'll improve the probability of finding the vehicle and picking it up. Also, the earlier you assign and repossess, the less chance of extensive vehicle damage. The longer that vehicle's out for repo, the more opportunity for damage to occur and then lower the value of the collateral. Also, the longer it's out for repossession, the less accurate the insurance information you have in your file becomes. And then you limit your opportunity to file repossession claims for damages that might be on the vehicle when you pick it up. The second one here is information that you provide to repo agents. Give the agent as much information as you can. Examples, copy of lien perfection, proof of ownership, your internal collection notes so that they can pick up where you left off. The last known borrower, insurance, and address information. The more they have, the better chances of locating the collateral and effectuating a good repossession. And then last, don't shoot the messenger here. Compensate the repo guys. Money talks. You want your assignments to rise to the top, especially when delinquencies increase and then repo and assignment and volume increases. You want to be their priority client. So an example of a structure with a repo agent could be a tiered payment structure. So you build it around the time to repossess. So if you found the vehicle in 15 days and picked it up, then there's a $50 added incentive to the repo fee. Or you can base it on vehicle value. Vehicles $10,000 valued at $10,000 and above pay this repo fee, where the vehicles that are less maybe pay a less amount. The repo agent market and the industry is changing. Repo agents are really focused now more than ever on ensuring that they meet their margins. The ones that remain in the industry after the pandemic are really focused on margins to sustain their business. And then remember, guys, if they do well, you do well. I am going to pass it on to Scott, and he's going to talk about how to utilize all the resources that are available. And also, he's going to go through a checklist that kind of summarizes the 3 areas that we're talking about. So Scott, over to you.
Hi there. Yes, thank you. And again, when we talk about resources, Tina touched on this previously, is to get as much information as you can to the repossession agents that you're using. We've often talked about using even skip tracing partners who have access to far greater resources than a traditional repo agent and are generally, a little more well-versed in how to find a vehicle. They're using things like LPR, like license plate recognition, to find vehicles, but the skip agents are also searching, all the social media, everything they can get their hands on to locate that vehicle. And it's important, to use as a tool in partnership with your collection efforts, as much as you can. But it really does start in the collection process. As much information as you can gather during that process, during the life of the loan to that point, and to be able to store that information and have reference to it during the collection process is vitally important. Sometimes we also consider, as the volume starts to increase, it's been a couple of years now where repossession volumes have been depressed. We've seen it, in our business and through a number of our clients' operations as well. But as that volume starts to pick up again, which is something we never want to happen, but it will, consider outsourcing a portion of that collection activity to a skip tracer. Just try a champion challenge or something like that. See what the results are going to be from that group that, again, has access to different resources that you might be using internally. And I can't stress this enough either. Using remarketing providers will always ensure that you have the appropriate documentation that you need to show that vehicles were liquidated in a way that maximized the return at the auction, therefore, lowering the deficiency balance on the loan as much as possible. We've mentioned insurance tracking a little bit. Insurance tracking can also be used within the collection arena. A lot of times, maybe a borrower doesn't update their address. Maybe they moved in with their parents, who knows? But a lot of times that information, those addresses will come across in the insurance information that is being tracked. Most times an insurance company will not even rate a policy until they know where the vehicle is being garaged. They have to fill that out as part of the insurance application. And when we receive that information, or when an insurance tracker receives that information, you'll understand where the vehicle might actually be. But again, moving on to the next slide, a few things to consider, moving forward. It's kind of a checklist. Again, this is not applicable to every single scenario, but stuff that we like to consider kind of best practices. Review call scripts. If you have a call script, if you don't have a call script in place, get a call script in place for any kind of collection activity. But review your call scripts. Ensure employees are providing the consumer with accurate information, about how to prevent repossession and to validate any of the fees that are being charged, and be very clear about it. You don't want to be in a situation where you're in an argument with a borrower about whether or not they were informed of something. A call script helps you provide that back, even if it is to the CFPB or to whoever, that yes, we provided all of this information to the borrower. And almost as important is to update those annually to ensure compliance with any changing regulations. Review canceled orders to ensure a correct process for canceling repossessions. If or when a consumer takes the appropriate steps to get out of that situation. You do not want to, of course, you do not want to be in a wrongful repossession situation. Review your repossession service providers and servicers to ensure their prompt and proper communication and compliance. Again, if you do use a skip tracer or an outside repossession company, make sure that they're doing things the right way as well. It's always going to come back to the bank or financial institution in the case of incorrect or wrongful repossession activity. Review consumer complaints. Again, Tina had mentioned this earlier, but it's always good not just to note, hey, we received a complaint, but understand what's in the complaint. Does that mean that we're doing something wrong? Do we need to make a change? Again, do we need to make a change to a call script or an activity that we're engaging in during our collection process? It's always good to read them, understand what's happening. Are you seeing the same things over and over again? And then, that ensures the proper investigation, resolution, and follow up on those complaints. And again, if you need to make changes, make changes. And always review all fees charged to a consumer to ensure they were legal and in alignment with UDAP. So again, those are 5 pretty standard checklist items that we think are really important And again, almost as important as those 5 things is to make sure that you really are updating this as often as you can, every 6 months or every year, just to make sure you're not going to find yourself afoul of any changing regulations that might be out there.
Thanks, Scott and Tina. We do have a couple of questions here that we can get to now. The first, and I'll let you decide which person is going to answer this, but the first question is regarding having different fees based on vehicle value. When we've spoken with lenders about that, they have been very hesitant to pay for value, concerned about the CFPB declaring lenders are applying disparate treatment to their borrowers.
I'll speak to this one. I think when you create a tiered structure, you kind of have to use it across the board. And if there's hesitancy towards creating that payment structure around the value of the vehicle, then the other option is probably the best option. Create it around time to repossess. So build that structure out where your repo agent understands that if we find this quickly, we get those additional dollars added to the repo fee. That is a motivator just as much as using vehicle value, maybe even more if you build out a structure that's around time to locate.
I would agree with Tina on that. It would only add, of course, my favorite thing, which is to document whatever, compensatory structure you might be using with the repossession agent. And make sure you follow your own process.
Excellent. Thank you both. A couple more questions here and then we can wrap up. How is Allied preparing internally to support the anticipated repo volume increase, and what impact does that have on lenders?
Scott, you want me to take it, or is that, well, we can both take it. We probably will come at it from 2 different perspectives. So for us, it's making sure that we have the resources ready to support our clients as the volume increases. This is both on our insurance side of the house and also on our Repo Plus side of the house. Also, we've enhancing technology through automation so that volume can be easily absorbed and it's not as much of an issue when you're dependent on finding the right people to do the job, because we all understand and everybody's experiencing this nationwide, finding good talent. And so we've spent time enhancing our technology and building out ways to use that to improve the process, streamline the process, make it quicker, make it improve the quality of the process so that when the volume comes, we'll be ready. Scott, you have anything else you want to add to that?
No, I would agree. And something that we've done as well, and I encourage everybody, is to always, stay in close contact with vendors. So we have a number of vendors that we've used for a number of years. Unfortunately, a couple of those did, the pandemic put them out of business. And because the volumes dropped, we didn't have a lot of stuff to send to them. So you constantly have to kind of be looking around for vendors. You may need to bring one on, at the drop of a hat. And, with all the compliance considerations that are in place, you've got to have that ready to go almost at a moment's notice. So you're constantly sourcing new vendors. And again, we talked a little bit about Champion Challenge in a different situation, but we'll do that as well, just to, keep everything fresh. So if we have to, quickly turn around a vendor and get them on board to handle any additional volume that we might see, we're ready to do that. I would agree with Tina. During this lull that we've had for the past 18 to 24 months, we've really focused on operational efficiency. How can we do this faster, better, with, again, utilizing automation, RPA, technology wherever we can, not to replace people, but to enhance their productivity. That's really been a driving force for the last 2 years. And not that the pandemic was ever a good thing, but it did allow us the opportunity to really dig into that, again, over that past 1.5 to 2 years.
Excellent. Thank you both. One more question here. What are your clients most concerned about from a risk and recovery standpoint?
Scott, you can chime in here too. I'd say the increase in delinquencies as it starts to creep up, ensuring that they're prepared for increased repossessions and making sure they have resources available in the repo and remarketing space to support them. And then of course, maximizing the recovery dollars post repossession. That's a big one. And Scott, you can chime in and see if there's anything else.
Yeah, I think a lot of it is, the bigger things, resources. A lot of repo agents went out of business in the last couple of years. And, again, that's probably where a repo forwarder is probably helpful, that you don't have, don't have to go out and find them yourself. There's somebody doing that for you. And I would agree with Tina, the post repossession recovery is becoming much larger. Vehicles are worth a lot more money. So you're talking about the remarketing aspect. Are you getting every dollar? I mean, used cars are selling at a very increased rate at this point. The value on these cars is almost ridiculous. Are you getting every dollar that you can post repossession to lessen the impact on the borrower? Be that at the auction or be that in some kind of post repossession insurance recovery situation. Are you doing that? So again, I think those are the two big ones, but then always hanging out there is compliance. It's to make sure you're doing things and documenting them as you move through the process, so that if somebody comes in and looks at it, you've got all your ducks in a row, all the I's are dotted and all the T's are crossed. Especially when we get into that situation where it just ramps up with the repossession volume, because again, if you're not ready for it when it happens, it's going to hurt you.
Thank you both for that. And then I just had a question or a comment. If one or both of you could comment on the influence or the importance of insurance tracking to an effective and compliant repossession process, that sort of goes hand in hand. Can you give us some thoughts on that?
I'll give you one. I mean, I think it provides an avenue to really monitor your customer as they change insurance policies. They may provide address updates, and so being in a position to have access to that information through tracking, it's a tool that's valuable in the skip tracing process and in the repossession process. I'll let Scott talk about the next piece of that because it's right in his wheelhouse. So Scott, I'm sure you've got some comments around insurance tracking and the benefits of it.
Oh yeah, no, 100%. I think what Tina's mentioned as far as in the collections process, understanding that if you're not updating their address, they are updating it somewhere. And that first time that you send a repo agent out to knock a door and then there's nobody there and they don't live there anymore, you have an avenue to go, okay, well, let me go check this information over here. And oh, look at that. They moved 6 months ago and here's their new address. You can get that kind of information. To me, one of the larger impacts is post repossession. Again, if you repossess a car and it has $5,000 worth of damage on it, having access to the insurance information on that vehicle might allow you to file a claim as the lien holder against that insurance policy and collect those additional funds from the insurance carrier. So that is, the biggest perk on the post repossession side. But on the pre-repossession side or during that collection process, it's just another stream of information that you can, look back on or look to hopefully, find that borrower that may have skipped out.
Excellent. Well, thank you both so much for that awesome information. I want to remind everyone that you can find more detailed information on our website, alliedsolutions.net. And also, please sign up for our Auto Finance e-newsletter, which provides monthly updates, quarterly updates, alerts on all things happening in the industry and within Allied Solutions, alliedsolutionsnet.enews. And if there's any questions or follow-up needed, please don't hesitate to email me or contact me for more information. So very much appreciate Tina and Scott and your insight. And also, again, thanks to Cherokee Media and Nick Zulovich for hosting this event today. And with that, Nick, I'm going to turn this back over to you.
Excellent presentation from Susie Straffen, Tina Love, and Scott Myers of Allied Solutions. Much appreciate each and every one of you for sharing your thoughts, and we thank you so much for joining us today. And just a quick reminder that we have recorded today's session, so keep watch of your inbox for a link to the recording of this presentation, so you can review the information as well as share it with others at your shop. So again, Susie, Tina, Scott, thank you again for your time and expertise.
Thank you, Nick.
Thanks, Nick.
Thank you.